Today we're going to talk about Palantir, stock ticker symbol PLTR, and how an analyst just came out from Credit Suisse and downgraded the company to a sell, to a $17 per share price target. The other day I made a video on Palantir saying how their business is growing rapidly. They're securing a number of government contracts and how they're setting themselves up to be a massive player in the data industry moving forward, how I think they're great investment. So in today's video, I'm going to break down exactly what this report said and why they downgraded Palantir, where I see the stock price going, and if I still think it is a good investment. For those of you who are new here, my name is Michael. I'm a 21-year-old investor, entrepreneur, and full-time college student. The past 30 days, I've made about $175,000 in one of the many investment accounts that I share with you in our private group on Patreon. So if you'd like to know more about what stocks I'm buying, what stocks I'm selling in my personal investment accounts, as well as exclusive content that I don't share on YouTube, and if you want pre-release access to my new show called The Stock Room, where I talk about stocks with my 80-year-old millionaire investor friend, well then make sure to join my group using the link down below. We only have a couple of spots left. So anyways, let's talk about this report and why an analyst downgraded Palantir. Credit Suisse analyst Brad Zelnick just cut his rating on Palantir stock to underperform, though he did raise the price target on the stock from $13 a share to $17 a share. Currently, the stock is sitting at around $26 per share, and it has skyrocketed since its IPO on September 30th, when it IPO'd at a price of just $9.70 per share. So it's skyrocketed almost 3x since then. Many analysts are getting concerned about it. However, I talked about the other day, I think it's still a great investment moving forward. Looking at the numbers before we get into what the analyst said, looking at the numbers right now, Palantir, their revenue in the third quarter of 2020 grew 51.8% year over year. And if you look at the annual report from 2018 to 2019, their revenue grew 25% as well. So they're growing very quickly. A couple of things that I really like about this company right now is that they just secured a number of massive government contracts. Some of them are a little smaller, but either way, getting contracts with the government is only going to help long term, set them up for recurring revenue. Currently, they're working with the U.S. military, and specifically the U.S. Army Research Lab has selected Palantir for a $91 million intelligence and machine learning contract, and Palantir has also been selected for prototype contracts for the next major upgrade that the U.S. Army is going to make in 2023. On top of this, they're getting more incorporated into just U.S. and research in general. And finally, the last thing with Palantir is that big corporations are signing massive deals with Palantir. The company recently signed a massive aerospace customer for a $300 million contract starting in 2021, and they've also started to sign a number of struggling Fortune 100 companies, including oil super majors. So they're looking to really grow their business not only with their government contracts with the FDA, aerospace, but also with big corporations and Fortune 100 companies. So they're really setting themselves up to have recurring revenue and continue to grow. And one thing to keep in mind with Palantir is that the data industry is only going to get more and more important, and companies are going to be spending more and more money in it because now the way businesses analyze customers, analyze everything in their business is all around data, how you can use the data to improve your business, make things more efficient, and just generate more revenue. So data is extremely important, and Palantir is at the forefront of this, especially with their government contracts. But anyways, let's look at what this analyst had to say. So Brad Zelnick said that he's concerned about Palantir because 20 customers account for nearly 60% of the company's revenue. And they said they're highly dependent on government contracts, which may be harder for the company to get in the future. In my opinion, I don't think this is 100% accurate because government contracts and securing a government contract, as long as Palantir can deliver on what they said they would do, I think it's actually going to make it easier for them to get more government contracts in the future because once you do one deal with the government's not going to want to work with 10 different data companies. If they like Palantir and Palantir does a good job, they're most likely going to start giving Palantir more and more business in the future, and I think it's going to get easier and easier for them to get more business with the government. So I actually think that is a positive for Palantir. On top of this, he said that they downgraded Palantir to underperform because they see the valuation disconnected from fundamentals, with the stock now trading over 50% above their previous blue sky scenario. While this is true and Palantir is trading at a very high multiple of their current revenue, I believe that Palantir has a very bright future because of their massive growth. They're growing over 50% year over year. If you look at what they did last year compared to this year, compared to the contracts they have already set up for 2021, they're on track to grow even more in 2021. They have this over $300 million contract with aerospace companies in 2021, and they're also working with the government. So because of this, they already have a number of contracts in place, not even talking about ones they're going to set up during 2021. So when you look at a company, you don't look at how they are right now. I look at how they're going to be 5 or 10 years from now. And 5 or 10 years from now, I see Palantir having more government contracts, more big corporations, and just generating significantly more revenue than they are right now. So I don't think their valuation is too high right now. While there may be some fluctuations in the short term, I think what this analyst had to say about the company relying on just a couple of customers being a bad thing, them too relying on the government being a bad thing, I don't quite agree with that, because I think having the government as a top customer is only going to lead to more business for your company. If a big corporation sees that you work with the government, they're going to trust you 100% to be able to handle their data as well, if the US government trusts you to handle their data. And finally, last thing to just be aware of, which is a valid point, is that currently about 80% of shares outstanding for Palantir will be free to trade on the third trading day after fourth quarter results. This is because the company recently IPO'd, and the lockup period following its initial IPO offering expires in mid-February. So that means all of the major shareholders, companies that invested in Palantir years ago or prior to their IPO, now have the opportunity to sell their shares and get out now. So many people expect significant Palantir stock to become available in the market, and this could cause some short-term drops in the price. However, still long-term, I think Palantir is a great investment. Some of the points this analyst has are good points. They do have a few customers, but I think having the government as a customer is only a good sign, only going to help business long-term, and will actually lead to more revenue when this analyst sees it as being a downside. So anyways, that's what I think of Palantir stock, what this analyst had to say, and my opinion on it moving forward. But I hope you guys enjoyed today's video. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.